For more on the markets, we cross to Nompumelelo Siziba. She's at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Take us through the market this afternoon.
Thanks very much, Nzinga. Yes, well, the all-share index, it opened in positive territory, but then as the morning wore on, it then changed into negative territory, with the mining counters in particular dragging things down. Financials have managed to keep their head up slightly. It may have something to do with the fact that we're waiting for the Reserve Bank to decide on interest rates this afternoon. The market expectation is that rates will be left unchanged, so perhaps that we'll see the repo rate staying at 6.5%, the prime rate at 10%. But we wait and see. We'll get that information around 3:20 from Lisicha Khanyago. And then also we see that in terms of precious metals, gold and platinum, they're having a good day today. Crude oil has lost a little bit of its value, although it's still flirting close to $80 a barrel. So it's still very firm indeed. The local currency vis-a-vis the US dollar, well, more or less stable on the New York close, not really much of a change. It has depreciated relative to the euro and the British pound, though. And then in company news, Tiger Brands, which of course has had a hard time with this whole listeriosis crisis, although the crisis only arose in the month of March. They reported their results for the 6 months ended March, and they didn't do very well at all. Headline earnings per share were down 16%. Their operating profits came down a little bit, and yeah, no, they haven't really done so well, but they're optimistic about the future. And I did do an interview with the CFO, which hopefully you'll watch a little bit later. Let's take a look at the indicators. Well, I'm joined by Devin Shute. He's from the Robert Group. Thanks for joining us, sir.
Good to be here.
Good stuff. A lot of stuff happening internationally, as always. Donald Trump deciding that he may decide to levy, import duties on automobiles of 25%. That's really messing up the US-China discussions. And then on top of that, more positively, the Fed coming out and saying, yes, we recognize that inflation is rising, but it may not necessarily prompt us to raise rates as fast as the market expects. So when you mix this into the pot, what does it mean for global markets? We're seeing them more or less positive, except for the all-share index.
Yeah, that's right. I think both of those had a weakening effect on the dollar. Mr. Trump's comments around those auto tariffs, as well as the very dovish statement from the Fed that we are probably going to get lower for longer rates in that regard. So a weak dollar has really helped to prop up commodities. You mentioned gold and platinum are one of them. The reason oil's moving back as opposed to the rest of the commodities is there was a surprise higher inventory level out of the US that the market was expecting, and as a result you saw that come off a bit, which is good news. That's an elevated level at the moment, and that will potentially tie into the Reserve Bank announcement later today.
Why do you think the Fed Reserve is being quite hawkish in this regard? Is there a delicate balancing act between them ensuring that inflation doesn't run too hard and them not scuppering economic growth in that economy?
Yeah, correct. So, I mean, they are watching inflation, and they've said they're monitoring it closely, but I think they're very worried about not growth so much, but the impact that a faster rate tightening cycle would have than some people are expecting in that regard. So, we see, even when the market has an inkling that rates are going to go up faster, we see those treasury yields move higher, and we see global equity markets move lower. So and they've been consistent in guiding the market. The market interprets it different ways depending on how it's feeling, but we're seeing that low for longer standpoint coming through consistently from the Fed.
We saw yesterday, and I just wanted you to just keep us abreast of what's happening with that. The Turkish lira got hard hit. It was down about 5%, but for the month up until now, it's been down about 15%. And of course, I was asking questions about the relationship with South Africa, whether we might also feel the effects of contagion. So what's happening with it right now?
Yeah, so I mean the lira has been in free fall. There's been a huge problem with the currency there. And their central banks come out this morning and announced an emergency rate hike of 300 basis points, massive hike, and that's helped to shore up the currency quite a bit. As a result, when we look at our bond market here, our bonds have appreciated as a result. So I think there's relief that there's been something done to that. Regarding contagion, yes, it's always possible. Emerging markets from an international investor's perspective sometimes are lumped together in this amorphous group. And yeah, I think they had to do something. The currency was really under siege.
And then our central bank, obviously making a decision on interest rates today. The market expects it to remain unchanged. But of course, inflation is rising rather fast. We saw that inflation print for April yesterday, rising 4.5%, whereas the one before was 3.8%.
Yes. So remember the one before surprised on the downside. So that might have been a bit of an outlier. It was nice and we all took it. 4.5 is okay. It's in the midpoint of the Reserve Bank range of 3 to 6% in that regard, and it was below analysts' forecast. They were expecting 4.7, so it still came in below, and that's after we've had a lot of VAT increases and tax increases coming through the system. So I agree. I think the Reserve Bank will pause. I think the fact that VAT hasn't fully been priced into this inflationary number, that is still coming in future prints. I think the fact that the rand has weakened probably 5% since the last Monetary Policy Committee meeting. I think all of that bodes for them to err on the side of caution and wait and see. And if we kind of look further out, I think the trajectory has shifted really now to, instead of getting more interest rate cuts, possibly loaded later in the year, they're probably going to pause, if everything stays as is, and might even see tightening next year.
And then let's take a look at a couple of stocks if we have time. Consumer-facing ones, famous brands. They came out with their results. They're not doing very well, are they? I mean, for a long time they were a darling of the market. They seemed to be doing all the right things. Then they bought an asset in the UK, and then everything just went boo.
So this was the strategic acquisition of the Gourmet Burger Kitchen. It was supposed to be transformative for the group, and unfortunately I think they went from a very successful franchising model, integrating down the value chain vertically, to this huge store-owned company, and it just hasn't worked. What they paid for it, they've had to continually write down that cost, and that's really hurting it. They reported 1/7 of the profit they would have reported in this period because of those write-downs. So yeah, they are struggling. The shareholders haven't received a dividend since 2016, and that's as they try to pay down the debt from this acquisition. So financing costs are going up, and the group, I think, in almost an admission today, has come out and said that they are now moving away from this aggressive acquisition growth, and they're going back to organic growth, which I think is right. And yeah, we're going to be watching that closely.
All right, we're going to leave it there. We've run out of time. Thank you so much.
Pleasure.
As always, Devin. That was Devin Shute. He's from the Robert Group. After a short break, and Zinga with more business news for you.